All right. What's up, Wall Street Jack boys and girls? I'm Pierre Lawson, founder of the Wall Street Jack Boys, and this is Game Plan Sunday, October 28th is the day. So just want to welcome everybody for showing up. Y'all know how we do every week. We prepare for the stock markets. We actually do a rundown of what happened last week. So we take a look at what occurred in the markets last week, take a look at the current environment, what's going on in the stock market world or any financial environment, how it's going to impact us and how we operate in the stock market world. And then we'll take a look at how we're going to make some money this week with all that information that we just gathered so that we can make some, critical decisions, executive decisions, and, make some money in the stock market. So that's the whole game plan. And anyway, we'll go ahead and get everything, jumping. Make sure y'all guys hit that share button, send this to somebody you think will find some value in this, of course. And I am looking scruffy today. So that's my disclaimer. Normally I'm, a little clean, but, today it's I got my hoodie on. It's hoodie season. So make sure you guys grab the merchandise, right? But either way, so what happened in the past week, we'll talk about last week. So last week, overall, the markets were just down. We lost over 3% basically on the all the indexes. The NASDAQ, the Dow Jones, the S&P 500, everything was just down overall. And it was really choppy. So the markets are super choppy. We had nice up run, down run, up run, down run. And these things are happening like all in 1 day sessions. Normally the trends will last, for a couple of days. That's like normal distribution, right? This right here is more volatile because we're getting these strong, super strong moves all in 1 day, which is what I call the chop market, right? So when I talk about welcome to the chop show or stay out of the chop show so that you don't get your head chopped off, that's what happened when we're in this environment right now. So the only way that you're going to know how to trade during a choppy market is that you have to be present like right now. So just for you showing up and you're trading right now, you're going to get the best education that you've ever gotten because there's no guru who can help you through this. You have to have your experience. Okay. So, shout out to everybody that's trading right now. Or if you haven't, hopefully you're looking forward to getting into it because this is something that you're going to learn that books just can't teach you. You got to be in here to know what's going on, to know how to navigate the same way that surfers know how to surf. Out in the waves, same way, you just got to get that experience. So we give you a blueprint here at Wall Street Jack Boys. You don't have the classes. Make sure you get our courses at wallstreetjackboys.com. But the rest of it, you got to be out here with us and get this wisdom. Okay. So that's why you guys are here. All right. And that's what's up. Okay, good. I see you guys in the chat. If you have any questions, make sure you post them down in there. And so that we can actually take care of your questions. We have some of our top students that's in the chat. So if I'm not able to help you out, they will be able to help you out. Any questions you guys have, make sure you drop them in there, okay? All right, so with that being said, Tuesday we had talked about Davos in the desert. And that was a situation, I don't want to say any names, but, the guy who got killed over, with Saudi territory at the embassy, right? So the guy got killed. He's an important guy, should have been in a safe place, but he got killed in their place. And they chopped his body up in pieces. So anytime I told you somebody chop your body up, that's extra killing. That's extra. I don't know what he knew, but he knew something that they didn't want to get out. And so from that situation, had a lot of the big gurus who, the financial wigs who run everything was like, they're not going to the Davos in the desert with the Saudis. And so because of that situation, it put a lot of bad blood in some people's mouths. And, there are certain countries and certain entities in Congress that actually want Saudi to pay. They feel like somebody needs to go to jail for the situation. Now, why it's important, we don't get into the politics. We just get into the money side. Like, how is this impacting the money? So what you have to understand is that Saudi has been throwing around a lot of money. And when you throw around money, you earn yourself favors, right? So you throwing money, people just don't give you stuff for free, right? My mom always taught me that, right? Some chick trying to buy you some jewelry, buy you this, that, and the third. She could probably want a relationship with you or something, right? So Saudi been throwing around money to, position themselves, in America. So they're the biggest arms buyers. They buy all the guns, basically. And we have a strong relationship with them as far as oil and everything else goes. And so they got a lot of favors. And what's probably going to end up happening for this situation, and again, it is what it is. Sorry that they had to be casualty, right? That's terrible. I think it's terrible. I think they're going to get away with it, right? Just because they got too much clout and they paying too many bills over in the U.S. A lot of these tech companies are in Saudi's pockets. So what's up, Ron? How you doing, my man? What's up, Mia, Mark, and everybody? So from that situation, we may see some turmoil, dealing with the Saudis. And, their economy is doing all right, but we still got oil to worry about. So again, OPEC, OPEC, if you don't know who they are, you want to see why your gas prices is going up, shooting through the roof. It has nothing to do with the president. It has everything to do with the OPEC, OPEC, okay? They're the ones who do that. And this basically is the Saudi cartel. Saudi Arabia, they control all of that. So if you're looking at the chart that I got up here, you can see CL, that's oil, okay? So we're looking at the oil here, right? And we had these floors down here, and we just actually hit a floor, okay? So we're going to keep that in mind, that oil has hit another floor. So that means that oil may be on another rally back to the upside. We already know from all the past sessions that we had that, they're trying to, when I say they're, I mean OPEC, they actually have a goal of raising the oil to $100 a barrel, right? And you see on my chart, I don't even have $100 price tag even up here. So that's actually beyond what my chart is, which I can show you that. But that's just to show you how far away we are from their target that they actually really want to hit. So anyway, but that's just important to know, again, with the whole situation with that, we have some tension between, certain entities that's controlling, how the monies is flowing and where the monies is flowing on that side. So that was, Tuesday. Wednesday was crazy because that was the day that the markets wiped away the whole gains for the whole year. Okay, so if you're the person that's passively investing, right? And listen, you go passive, that's entirely up to you. I encourage you to work your own portfolio. That's what we teach you for, so you can learn how to work your own money. If you're somebody just sitting back, just throwing your money, just landing out there for somebody else to run it, I mean, these guys out here are just working a job. You know how people work jobs? You know how they feel about their jobs for the most part? A lot of people just hate their jobs, right? And so anyway, and your money is their job. And ain't nobody going to treat your money the way that you're going to treat your money. So it's important that you learn how to make your money grow for you. Because if not, you sit back, then you're going to start losing money. So say if you just got into the markets this year, and the markets on the start of the year, in comparison to where it's at today, it actually is losing money. So we're going to pull up the S&P 500 index, and this is a good indicator for where we are in the market. It's all the top companies, how they're doing, right? And so you see this big purple line that's going across the screen here. This is where we started the year, and this is where we currently are. So if you can see that, doesn't take a rocket scientist. That the numbers have fallen beneath that line. That was a floor level, and I had that indicated there because we were, testing that and was trying to see what was going to happen with the markets, right? And so we just follow the trends. We're trying to see what's going on, right? And we make our money based off of that. So anyway, Wednesday was the day that we broke that. Okay, it snapped beneath that. Not a good sign, right? It's not the end of the world, but it's just not a good sign for the economy. And we'll talk about some of that as well. But let me just finish recapping on last week, and then we'll go, to some of these scenarios. So from there, Wednesday we broke. Thursday we rebounded. Okay, there was a rebound, and then Friday it just went all to hell. Okay, so I'll just show you guys. Again, broke through the levels, came up, popped through the levels, and then went straight down to hell. All right. So that's how we ended the week. So overall, markets is down for the year. Okay. So if you just got in this year, say you got in here, started your little 401k, you're probably losing money. Okay. So anyway, it's a good time to check your portfolios, right? Don't shoot the messenger. All right. So anyway, but with that being said, we had some good numbers on Friday. There were the GDP reports. The analysts were reporting, were actually calculating that we'll have 3.3% in growth. We actually hitting 3.5% in growth. This is whole economy growing. The economy is growing, and your money is growing. If you got money in an investment account, then your money should be growing, right? So, but basically, GDP, it hit its numbers basically. But we had an aggressive growth on second quarter. So second quarter, we went from like 2 to like 4.2, and then we dropped down to like 3.5, which is still beat their estimates. And October is normally a volatile month. That's just historical. And so we're at a time when I told you guys from the past game plan sessions, if you've been in every game plan session for the past month, then you would already be ahead of the market. You should be protected. You should have been making some money, and you should have been able to mitigate your losses because I kind of already gave you the groundwork. Not a guru. I don't claim to be a guru, but I'm not a psychic. Nobody is a psychic, right? But I just take the information that we have when we make executive decisions based off that information. I told you guys in the past weeks, this is not the environment for you to just be jumping in, just buying stuff all, hey, we're buying the dip, we're buying the dip. That's normal scenarios. This is not normal. So I've been telling you guys the past week what's going on, and we will talk about it. It's real high level stuff that's happening right now, and it's impacting the markets. So if you were somebody who jumped in on some plays this week, if you were not fast enough to get your money, then you probably get your head bust, right? In this volatile market, we're swing traders. We normally hold our positions from like 3 to 5 days or so, right? This is not the environment to really be holding, okay? You got to get in, get out probably within a couple of hours, because when they're making strong moves up and strong moves down, that normally takes a week to make these type of moves, and we're getting them all in one day. And we're getting a reversal all in one day. It's like whoop, whoop. So if you say whoop, whoop, I like that sound effect, right? Whoop, whoop, hit the floor, bounce off, and come back down. You say, oh, I'm buying a dip. You buy the dip, you come back in. I mean, it goes up a little bit. You fail to capture your profits. Boom, you're getting your head chopped. That's what we call the chop show. So right now, we're still in that environment. The market is in a correction mode. It is not yet bearish, but it's just not looking good. Okay, so I told you guys, I believe it was Wes who were in the group. Patience is a position. FYI, just in case you didn't know, patience is a virtue, and in the trading world, patience is also a position. Okay, so you don't have to always have a position on every day, right? So, because what happens is that you end up over trading, and then so you have some people who make $30,000 and they lose it all, or $20,000, whatever it is that you do, you lose it all. You have to start practicing patience. But for one, you have to have market awareness. So for you guys that's joining, you're getting something that nobody else is probably getting. You're getting some wisdom here. It's market wisdom. You got to know what the environment is. You know how to play with your money. All right. So for everybody who's already, Wall Street Jack Boys members, you guys already know. This is for the new kids here, new people that's here. Right now we're in earnings season. Okay. So earnings season is where all the companies, all the corporations, all the money that they make or all the money that they lose, they have to give an account to the SEC. Okay. So if you're somebody who maybe want to know if you're going to get that raise on your job, or want to know if you're going to get fired or laid off or whatever the case may be, you can know that information before it even come down to you from your supervisors and managers, because most of them have no idea what's going on. They're just employees. Stock market gets all the information first. Okay. So when you get these reports, you want to know if you're going to get that raise. If your company mess up on earnings, and they tell the SEC, they have to be in complete transparency here. These are the ultimate regulators for these corporations, basically. And so when they tell them, hey man, it's not looking good, we're losing money, boom, 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 you're probably not going to get your raise. So that's another important reason for you to learn the stuff that I'm teaching you. You don't have to actually apply it, have to be in there every day, but just having the information is valuable because it does impact you. If you're in the system, you're working, even if you got your own business, you need to know what kind of environment that you're in, right? So anyway, thanks. I want to thank everybody who's here, because if you're here, then you care. And that's a good starting point. So with that being said, earnings happen 4 times a year, every quarter, just like a basketball game, first quarter, second quarter, third quarter, fourth quarter. We're at the end of the year. Okay. So we're basically in the fourth quarter of the year, but we get the reports from the past earnings. These corporations have to give transparency every quarter so that you know what's going on, and investors can make decisions based off of this. And so right now, it's like the finals, right? It's like your finals. You got the last, teams facing off, and everybody's watching. So earnings is like that time for the stock market. Everybody's watching. So because everybody's watching, and the news is just going crazy, and it adds volatility to the market. So you see bigger positions, greater than normal expectations, greater than the normal distribution. Okay. So these can be some jackpot plays for you, or these can send you to the homeless shelter if if you're not playing them right. So again, for you new traders out there, I don't encourage you to play earnings. Don't trade earnings. They're really crapshoots. Even myself or any guru, they just can't tell you which one to play during earnings. My position that I tell all my new traders is practice patience. Just chill out and watch and learn. See what's happening. Okay. The general idea is that if your company is beating expectations, basically Wall Street says, hey, this company XYZ is going to make X amount of money for this quarter. We're projecting that they're going to sell this, that, and the third. And if that company hits that number or better, then normally the stock market rallies and everybody start buying shares. Like, yeah, that's a good sign because this company is growing, right? But if that company missed one little thing, okay, then it goes slam to hell. Boom, everybody sell off. It's just crazy, right? It's really subjective. And this week, the name of past week was all about Amazon and Google. For you guys who was watching, Amazon, again, it's a great company. Google, fantastic company. Even before that, if you're in the past game plan sessions, we've been talking about staying out of the FANG stocks, staying out of the tech stocks. If you knew that, then you should have been immune from what was happening, because the big picture is that in this environment that we currently live in, artificial intelligence, data, all this stuff is what's pumping, driving these companies to, what's up, David? Driving these companies to make money. And data is like the new oil. Everybody used to talk about the oil companies. Oh, I'm getting Arab money. I'm getting Arab money. You always talk about the Saudis with the Arab money. Well, even the Saudis are trying to work their way of getting out of oil and getting into artificial intelligence. Okay. But a new environment is that for you who have smartphones, cell phones, this has changed everything, because every time you use it, there's data that's going somewhere, and somebody's able to use that data to make some money. They use it to program machines, Siri or whatever, artificial intelligence you have. It learns you, and so they can make products around based off of what you give them. So anyway, with that being said, data is the new oil. Okay. So I don't know if you ever heard this before or not, but this is the truth. Okay. Data is the new oil, because we produce so much data. It's crazy. They have to create new metrics just to calculate it. We got like helabytes. I don't know if you know about kilobytes, megabytes, gigabytes, terabytes, petabytes, exabytes. They got a new thing called helabytes because so much data. Most of the data we have that exists now just got created in the past 2 years. This is all new. So anyway, with that, there's also some regulations that's coming. So if you look at all the growth that's been in the stock market, if I'm take you guys to, let me take you to a bigger picture. We'll take a look at the bigger chart here, okay? So if you see all this growth that's happening in the stock market, right? Most of this growth has come from the tech companies for the most part, all right? What's up, Marcy? So anyway, you can see this. Boom. All you had to do is just buy a stock, right? I'm buying a stock basically. If it's a tech stock, then you're good to go. All right. And I'm showing you guys on the S&P 500, but let me show you on the tech sector. Okay. All right. So this is the tech sector right here. Okay. So if you bought one of those tech companies right here, coming out of the recession, 2008 recession, boom. You see what I'm saying? That's just putting your money in one of these and just riding the wave. You guaranteed making money. I mean, come on, this sector down here, all the way up to that's 70 something dollars there. Let me actually pull up so I can show you some definitive information here. We don't just throw random numbers out. But anyway, if you see that, that's a 483% return just for you buying into the tech companies, okay? You don't have to do nothing. You just, hey, I'm getting whatever you're doing and buy a tech company, Microsoft, Amazon, whatever. And you just bought, if you just bought this sector, right? This XLK, you can actually do that. You can just, get this sector right. And you would have just made that money over these years, right? All the boom, most of the boom is coming from the tech companies. And so much boom is from the tech companies, old school gurus made all their money off of like the transportation stocks and stuff. I mean, them things they're all right, but you want every business is being created right now. Every business is being created right now is going to basically need Amazon, Facebook, Google. These are the FANG stocks. So you got Netflix and then you got Apple. For the most part, you're definitely going to need Facebook, you're going to need Amazon, and you're going to need Google, because most businesses are created online now. So that just tell you how important the internet is, and how it's transformed the way that business is being done. And the top dogs are under pressure, okay? So the tech stocks, again, Facebook, Apple, Netflix. After just pull the charts up and you can just see, like, yo, why I didn't get in on Amazon at this time? Like, look at that. This bananas, okay? This is a monthly chart. I go back 20 years for you, okay? But this is just parabolic, okay? You just buy that and you're rich, basically. So, but what's happening is the regulators are coming down. It's like, yo, these companies, they've been getting this information from people and able to make products because you give these companies all your information when you use these smartphones. So smartphones change the whole name of the game because data is the new oil. But regulators want to regulate that situation. And so you have them investigating Facebook, Google, Apple, Amazon. And when that happens, it's not a good sign. So I've been telling you guys for the past weeks, we don't want any tech exposure. We've been moving our money in other sectors outside of tech. So therefore, when they've been feeling the pain, if I bring you guys in on a daily chart, you can see they've been feeling the pain as of late. Okay. They're basically under attack. Okay. The regulators, you got Trump and everybody regulating, saying, hey, they're discriminating on people, closing people's accounts, and they, launching, government officials to look into this. And they want to basically break companies up like Amazon, or break them up, Amazon, they control basically everything they get in. And so you got the old school money guys that just say, hey, knocking on the regulators' door, hey, man, you need to check these guys. They're making it hard for us to do business, okay? You can't just come in here, start off as a book company, and then you're a tech company who does tech better than Microsoft. You got all the cloud technology. For everybody who don't know cloud, like we talking on the phone, everything you say, your pictures, your video games, everything is in the cloud. You don't even really need hard drives and stuff no more. Well, Amazon is the leader in that, okay? Start off as a book company, and then they got consumer products. Then they got grocery stores, they got Whole Foods, right? Because they're doing too much, right? Great company, but you got the regulators coming in like, hey, man, we need to break these guys up. Same way how they did like Microsoft in the 90s. You remember Bill Gates was trying to buy the internet, like he was tripping, right? It was like, no, we can't let this guy have the internet. You got to be nuts. But anyway, so if you have that information, then hey, or if you already have some shares in these companies, it could have been a sign for you to say, hey, let's get some profits out of this right now. Let's go ahead and trim the fat here a little bit. If you got a couple of shares, let me go ahead and sell some of these off a little bit. You know what I mean? So those are the sign for that. What else here? So those are the tech companies. We were actually playing from last week, utility companies, because with all the volatility in the environment, so we have earnings. Okay, so remember earnings, it makes everything more than normal. It's like the playoffs for the stock market world, right? So everything is like real volatile, You can make big moves, big booms, and big drops, okay? On top of that, we have midterms coming up next week. The elections, midterms coming up next Tuesday. So the markets have been anticipating that as well. And that's going to have some impact. I don't think it's going to have that much of an impact. It's basically who's going to control the House and the Senate. I think that the consensus is probably Republicans is probably going to keep it the same. You didn't hear that from me. I'm just saying that's just consensus. Whatever it may be is going to be what it's going to be. Okay. But we expect some volatility in the markets from that. Okay. So again, when people telling you, hey, buy the dip, this is still not the time to buy the dip. Okay. Because there's still so much volatility, that is still overhead. On top of that, we have the Fed. So the main beef is interest rates right now and tariffs. Okay. So for one, Wall Street with the Fed. Okay. FED. If you guys got our blogs, right? If you get our blogs, our newsletters, then you already should know who the Feds are, right? So the Feds, ultimate regulators for Wall Street, basically everybody, right? So anyway, they're raising the interest rates. Wall Street doesn't like it because it's messes up the cost of doing business and not feeling it. We've seen a lot of extra sell-offs here also, kind of in retaliation against the Fed because the financial analysts beefing with the economists, and they basically want to prove the economists wrong or make them, chew their own foot. So it's like, hey, you guys want to raise the interest rates up too aggressive. We don't appreciate that. You got Trump attacking them on top of it, right? So he got to muscle them up. And then, they're going to try to be strong with, Jay Powell, the head of the Fed. He's like, hey, we have a job to do and we're going to do it. And we're not going to let the president, punk me down. And see, the Fed, they move independent from the president. The president has no power over them, right? So they're doing what they feel is best. But the financial analysts are saying, hey, y'all got it wrong. And basically, you've seen a lot of sell-offs because it's trying to weaken the economy. Now, this can do either one of two things. It can actually make the Fed slow down their rising interest rates because they use that, as a weapon to fight, against the economy breaking, right? And so they're raising the interest rates because they've been saying that the economy is overheating and they want to stop it. Financial analysts are saying, no, the economy is not overheating. The only inflation you're seeing is because of the rises in gas prices. Everything else is good, right? consumers are spending crazy amounts of money. You guys are spending more money, and it's crazy. You guys are spending money at a time right now. This might be a time for you to slow down. It's because we don't know what's going to happen. But if there's going to be a correction in the market, a bear market, then we're on the brink of that. Okay. But when they're looking at the numbers, they're like, hey, these guys want to spend. Hey, you spending $1,200 on an iPhone. Y'all remember when phones cost like $200, right? $100, you thought that was high. $1,200, right? Anyway, I think some of the numbers are kind of loaded because a lot of people get some of these devices on credit, but at the same time, people are willing to spend this type of money on this. So when they're looking at the numbers, they're like, hey, economy, they can deal with higher gas prices. They can spend $1,200 on phones, right? So they're looking at the numbers. This is what they're using to make decisions off of. But anyway, you got the key point in this is just remember that Wall Street, they're beefing with the Feds right now. You're seeing a lot of sell-offs in the markets because they don't want the economy to look so like it's overheating because it's doing so great. And the Feds are saying that the economy, let me see here. Hold on, we can lose you guys here. All right, so they're basically saying that the economy is going to be growing super strong here for like the next, couple of years. And so with that being said, you had the IMF that came in on top of that, which they're like the big dogs of the whole world. Okay. The big dogs of the whole world. And what they're saying is that there's going to be global slowdown for 2019 because of the tariff wars, the tariff beef, with Trump and China. So you got the big brothers beefing, right? So the tariff wars is weighing in on the economy and the global economy, all right? So basically everybody follow the big dogs. It's kind of like, again, I told you like when Jay-Z and Dame Dash split, it was kind of like whose side you going to take, right? So across the world, it's kind of like China and US, right? That's what it is. And so the IMF, there's the ultimate regulators and the banks who finance everything, right? They're basically saying that the world economy is slowing down, and it's because of the tariff beefs with China and US. And because that's happening right now, they're projecting the economy to slow next year. So a lot of the sell-offs that you're seeing right now, all the financial analysts, everybody just profit taking because the economy slow down. That means that you're not going to be able to make as much money, right? The earnings, I think what's happening right now because we're in earnings season, a lot of people is expecting earnings to save the economy basically. And so the earnings are still looking kind of good. It's not that they're bad, but maybe it's because the slow in growth is what they're projecting. And because that's happening, a lot of sell-offs right now. This could turn into a bear market because, you get panic that happens and, that's what happens from there. Let me know if you guys can still hear me. I think I don't know if we're still live on the other chat here, but we'll see here. Okay. So basically with that being said, you had to kind of tread softly out here right now because the environment is not conducive to just buying and holding or just lollygagging around. It's very volatile right now. We breached the floors. We breached the 200 moving average. Okay, thank you guys. Thanks. I'm glad you guys can hear. I don't know. I thought one of the feeds went down. But anyway, so we're waiting for decisions to be made. All right. So at the midterms, that's a decision that needs to be made. That's going to that need to be met, and that's going to be next Tuesday. After that's out of the way, volatility should start to do what it's going to do a little bit, ease off maybe if it does basically what the analysts are projecting. But if it does anything different, then it can go a little more crazy. But I don't think they're going to weigh too much on the politics. I think a lot of things are already in motion for what's going to happen in the financial world. The biggest factor is coming at the end of the month at the G20 conference. The G20 conference at the end of November is going to be really important because this is the opportunity where basically Jay-Z and Dame Dash get to come together and say, hey, we're going to keep Rockefeller together instead of break up, right? I know some of you guys probably wanted that. So if you're in the music industry, I'm sure you probably can relate. But it's kind of like that scenario. So it's like China, you got President Xi, and then you got President Trump. They're all going to be at the conference with all the world leaders. And this is the opportunity they have to come to an agreement to stop these the tariff wars, right? Now, I think that it's going to be a lot that's weighing in on the economy that's going to come from that meeting. People are going to be expecting, I say people, like the institutions, the big dogs, they're going to be anticipating or hoping that there can be some kind of resolve from that meeting. However, if there's no resolution, then Trump's tariff plans will continue to move forward with like 25%, which is not going to be good for the economy. We're probably more than likely going to see a recession if that happens, because it kind of backfires. It bleeds back into the economy for the imports. A lot of these companies are still getting their goods from China and they're being taxed like crazy. So anyhow, you may want to take a look at some tariff sensitive stocks if you want to do some shorts, because those are the ones that that you should probably be shorting right now, because they're going to feel the brunt of the stick. And so we're actually seeing in the earnings reports, a lot of these companies report that also. But you can jump on the call. I got a gift for you guys too. I'm gonna tell you guys about it here. This for you guys joining. Where basically I'm gonna give you my watch list. You take a look over here on the left. This right here, this little watch list is to help you to know what's going on, with the companies. Which companies are reporting their earnings this week? Or maybe you want to trade those stocks, or you got some setups. Then this is like a good. This is a good indicator here for you to know what's coming in. And so you just load this up in your platform, and then you're going to be good to go. So if you guys want that, make sure you drop your email in the queue here. And when we get back, we'll basically send this out for you so you can load it up on yourself. You can see what earnings we have coming up ahead. So I'm gonna go over some of the key earnings here, and then I'll take some questions from you guys. I'll take a look at a few stocks. I'll hold the floor for like 5 minutes. Take a look at a couple of stocks from you guys. We'll do like a quick technical analysis on that, and then we'll end the session like we normally do. So with that being said, coming up on Monday, we have, and it's a lot more companies, okay? Got like over 500 companies it's gonna be reporting this week. It's crazy, right? But we try to look at the most notable ones, okay? So with that being said, Monday we have Akamai. They're going to be doing their thing on Monday. And so we could probably get, they're not that big, but I like Akamai, right? And they're in the tech, and they're looking terrible right now, just so you know. I'll pull them up real quick. Not going to pull up all of these, but I'll just pull it up just so you can see what's their ticker. There we go. So yeah, and they're below the 200 also. Looking terrible, but they have earnings coming up on Monday. And Monday's probably going to be an all right day. And it's like, okay, we don't really get a good signal what's happening on Mondays, right? It's a lot of pent up emotions from a weekend. But Tuesday's going to be pretty dynamite. So Tuesday, we have Facebook, okay? My expectations, I don't really have much expectations, but if I can put my finger on it, I'll probably say not going to be good. Facebook under so many litigations, lawsuits, and everything. I have no idea. Nobody has any idea. But this is not a stock that I would want to play to the bull side, because they, again, they're under a lot of scrutiny and everything. So Facebook is going to be a big boy. Tuesday going to reflect, what's happening with their earnings. Facebook, not only Facebook, but Coca-Cola. If you guys have the past blog sessions with stocks, this is one of the companies that's in, that's getting into weed basically. If you guys capitalize on that, then congratulations. I'm glad we can help, right? Again, a lot of things we post, it will pay for your classes here at Wall Street Jap Boys. Like, it's crazy. You get the courses, you're going to make the money, make it back. It's an investment in yourself. Go for it, right? But anyway, Coca-Cola, their earnings are going to be Tuesday along with Facebook. And then we also have Amgen, we have eBay and MasterCard and Pfizer, a whole slew of other ones. So Tuesday is going to be a big day, okay? And then Wednesday, we're going to have Estee Lauder, General Motors, ADP, and Anthem. It's going to be a high day. Tuesday is going to be a big day. Okay, so Tuesday, remember that. But Thursday is going to be the day of the days, because in Thursday, Apple is going to be doing their reports for earnings, okay? So Thursday, big day, because it's going to be Apple. And Apple, it weighs the heaviest in the these sectors here in the Dow. And so if Apple falls, then the whole thing falls because they got the heaviest weight. So again, you want to see how they're going to do. Apple, a lot of people are betting that Apple is going to, is going to beat it. Everybody's anticipating for Apple to have a good earnings. nobody knows what it's going to turn out to be because, again, they have exposures in China and tariffs, and these things could start to show, we'll find out, how it's impacting them. But if Apple falls, you definitely want to probably be shorting, from there, in the Dow. Who else? Friday, we got Alibaba, Exxon, So Tuesday and Thursdays, those are going to be the big days. A lot of movement that you're going to see is going to come from Tuesday and Thursday, okay? So if you got some positions that's already in there, you may want to take them off before these days happen because, again, it's going to be, big moves, okay? So if you want to go ahead and take profits, then go ahead and take your profits. And it's okay to take profits now. You can always re-enter once this thing finished doing this correction mode, okay? And then you can find a better support. But right now, we have not had that decision yet. What else? I think that's pretty much it. So with that being said, I'll go ahead and take some from you guys. You guys got any stocks, any tickets that you want to take a look at? I'll take a quick look at them real quick. If you have any questions, make sure to put them in the queue. Also, mix this with like a little Q&A session for you guys. We got a lot of new people that's joining in on our Facebook side. If you have any questions, make sure you put them down here and we'll take care of those for you guys. All right. Wes, what's up? Ashley, how you guys doing? See, they're in the chat. See, you guys make sure you got to get in the chat, okay? So you guys in the chat. So Wes, do you have any stocks that you're looking at right now? Oh, you know what? While you guys figure that out, I'm going to pull up. Let me see. And Tractor Supply, this right here was a good chart here that I took a look at. And their earnings was actually pretty good. If you hover over this, it'll tell you that Wall Street expectation was 89 cents, and then they ended up hitting up 95 cents. So they actually beat their expectations, which is pretty good. And they got a nice setup. We got some floors in here. And let me pull up my annotation tool here. Okay, cool. So from there, okay, we got the floor that's right here. We had a buy trigger that says, hey, enter. We have more buy triggers that say enter. And, it's coming out of this oversold territory and it's hooking up. So the trend is going up also. A couple little squeezes here, but the momentum is starting to shift to the bull side. So when I put all these things in confluence with each other, my projection on this will be some more upside position. And we have our first Fibonacci target here that says, hey, get in here, ride the wave up, get out here, make your money, okay? Boom, free up that capital, put that capital back to use. Again, not that I always get it right. I'm not a psychic or anything. I can get it wrong like every other guru does. Again, if you see how my process works, I'm just using technical assessments and making executive decisions, and that's how we make money. If that, you see how easy I just did that? You can do that too. I'm nobody special. There's nobody special. This environment is totally different from any other environment in the past. It doesn't matter if somebody made $1 million 30 years ago, 20 years ago. Nobody's ever had to deal with this type of environment. So it's like every man for himself. You got to know how to, dive in and get your chips, right? And so I just show you a proven process that works, and you can use it for yourself. So basically, if you want to know how this actually can help you to make some money, generate income. We're not talking about waiting 30 years down the road, 40 years down the road. We're talking about generate you some consistent income on a weekly basis, like make your extra bonus, make you some extra side money that you don't have to actually physically work for or sweat for. Options is the way to do it. Okay. And if you guys know my story, coming from the streets and everything, for those who know something about stocks, may not know nothing about options. Well, and I'll tell you guys about my story later at a later time, but just a brief overview. When I was trying to hustle, when I was trying to sell dope, I first started trying to sell weed, okay? And selling weed is like stocks, okay? In comparison to options. And options is like selling dope. I hate to use a terrible analysis, but that's just like a no-brainer for me, so hopefully it can resonate with you. So if you take a little bag of coke, it'll equal a whole big old bundle of stocks, right? And you have the dangers, of weed. So the dangers that you have with the weed, you have to travel with all of this weight, right? It's a whole bunch of, extra just for you to make the same amount of money with coke, which could be this small, a little baggie versus a big, big block, right? So anyway, options is kind of like coke. It's like you can make crazy money. small amount of capital that's at risk here. Versus with stocks, you need a whole lot of stocks to make money. You can't just buy one or two stocks. You need to buy stocks by the hundreds or the thousands, and that's how you make your money with stocks. Okay, so those like, oh, I bought stocks and I made like, I don't know, 15 cents. Well, that's because you play in the stock market. With options, you take the same amount of money and grow your capital, over hundreds and hundreds of percents. It's crazy. So anyway, let me take a look at one for Wes. My man Wes, he wants to look at JWN. This is Nordstrom, and so this ticket here is actually looking pretty good, and we're going to actually take a look from here. So this is Nordstrom's for you shoppers out there. When you guys like shopping, you're going to spend all your money holiday season, or you can make some of that money back, right? So how about you let Nordstrom pay for your Nordstrom, right? That's how we do, right? So, hey, here's a lick right here. This one here is actually, it's looking pretty decent. I actually like it to the upside. And let me actually pull out. Okay, cool. So we have an established floor here on Nordstrom's here. We got a buy trigger here. Now, the key thing is that we do have resistance right here at the 6.8, but you can ride this up into that, okay? And it very may well blow through that resistance because we have a squeeze. For those who know our technical style, these are indicators that we use to make the decisions, and they work more than they don't. Okay. Now, we do have some drop in the trend here, right? But that's short term. What we're looking at is more long term. So we have these triggers here. And so for something like this, I wouldn't be super bullish on it. Doing a credit spread or something like that would be great on this, because with credit spreads, you make money if it goes sideways or if it goes up, right? So if it goes up or sideways or mildly sideways, it can probably even go down a little bit. What volatility does what it needs to do, right? You can lose on direction but still make money on a trade. And so that's another thing. So it's more than one way to make money in options than with stocks, of course. So anyway, for this one here, this is an idea bought by Wesley. It does have a squeeze here. I wouldn't be too aggressive on this one here. But what I can say is because of the domain knowledge that we had from the past weeks, last week, our play was the sector in consumer staples, and we did utilities. And so with the staples actually doing good with all the sell-offs last week, this is the only thing so this is the whole thing from last week, right? This is what we was talking about. If you're going to play here, you would have made your money. Where everything else was like, this was holding steady. This is holding steady. It went all the way, actually went bullish, and it was holding steady. This was Thursday, and then Friday, like everything just hit the fan, right? That's the whole market just reflected that move. But that performed better than every other sector. And so when you have, names like Nordstrom, Coca-Cola, all these different names, because of that information, it's like, okay, well, it may be all right. We also play utilities, which was a safe zone. A lot of the money was starting to rotate into the utilities. And then Thursday and Friday was a sell-off. Remember, the whole thing sold off. But we do these sessions on Sundays. So again, you would have made your money already and then got out the targets. ATHN. Okay. The healthcare. Not my favorite. Of course, this one here is a bearish stock. Anytime it's trading underneath the 200, that's some bearish mode. The trend is down here. We do have earnings coming up, okay? And so what we may see is that, we may see it bottom out a little bit. It has already breached this oversold. But at the same time, we don't know how the earnings is going to play out. So again, that level of uncertainty, just, I don't have any clear direction on that. I like that it's trending upwards, but it's nothing that, I like to have clear signals, like clear before I get in, so that I prevent over trading. What else? A sector that's setting up this week. Mia, is there a sector setting up this week? I don't think there's any sector setting up this week. In fact, all the sectors got smacked up on Friday. Like Friday was just it. Once the markets gave away the gains for the year, that reflected in every sector. And normally we do a big view from the sectors, and then we go in, we dial in from the sectors, and then we play it from that way. But this week I have no clarity on that. If you guys see something, make sure you let me know. We can take a look at it. But I have no clarity in the sectors at this moment. Everything is just looking bad, basically. But this week, we may see some consolidation a little bit, and then we may see further drops in the whole overall. Let's take a look at the S&P 500. Again, this is what it was. This is what it was. So we came down, we snapped down all the way down there, broke through where we start. Remember, we started the year at this purple line. Okay, we snapped down on that, and then we popped back up on Thursday, and Friday it went to hell, basically. Ronald, good one. He said gold. So basically, we talked about gold as well, and so just looking at gold. Okay, again, I already had these lines here, and this is the Fibonacci. So we teach you guys how to use the Fibonacci, like the pros, not just randomly using presets. Like we have a special formula that actually works. And you can see it working right here. This 100% line here. This is on gold. We called out gold a couple of weeks ago, which is a good move. We got into gold probably around here. So that was the move. And then gold fired off. When you see the squeeze fire off, it fired off, and then it hit this ceiling here. You see how it's consolidating across that ceiling? And then basically we would want to see gold pop through this. If it pops through there, again, that's just if you're playing gold, okay? Normally gold going up, the stocks should go down. But we've been seeing a lot of the things that correlate not correlating right now. So it's hard for me to call it right now anyway. However, I don't have that kind of projection on gold right now because this is a key level of resistance. This line here is a key level of resistance. And I will probably say that more than likely, this is probably going to consolidate to the side and maybe fall down before we go to the next rally with the stock market. So if this goes back down here to this floor, then the stock market should come up just a little bit here. All right. And this is the way I feel about this. It's because of that. And then I also have a sell trigger. Okay. This line here, anything above this is out of bounds. That means it's got to stretch so far up that it's got to snap back down. We see a loss of momentum here. All right. However, the trend is still up. So if I combine an uptrend with some of this drop in momentum and overbought territory, I'm just projecting, sideways movement here. And then, if the market rallies, then we'll see gold fall in. So again, normally we talked about, the big boys going into safety when there's volatility in the market. So normally you would say people should buy gold. And this is right now, this is not the environment. They're not even buying gold. They were going into utilities. We saw them going to consumer staples. And then a lot of the institutions just pulling money out of the markets. Another thing is the Feds with their quantitative easing, they're actually pulling out also. And that's, causing weakness in the markets as well. So yeah, that's basically my view on that. Anything else or any questions before we actually bring the session to a closing? This is pretty much the same thing here in GLD. I would be conservative up here, Ron. Let's be conservative up here. Sideways strategy probably wouldn't be a bad idea. Throw some iron condors on or something like that. We got high volatility or some spreads so that you can make some money off of it moving sideways, just chopping around. Okay. What about CMG? Oh, Chipotle was a big boy move. They actually, I believe they beat their earnings. And what's up, Abel? Chipotle, again, hey, have Chipotle pay for your trip at Chipotle in the market, right? Make you some money off of this. Now, Chipotle actually beat their earnings, which is a good sign for them. And we had a floor here. And as you see, we were at this oversold territory. And when it's oversold, that means that people got to start buying it back, right? Boom, buy back. We have a buy trigger here. We have uptrend momentum here. We do have some squeeze in here. So my projection on this would be to the upside. So yeah, I actually like Chipotle to the upside, Abel. Um, but I wouldn't get overly bullish. Be careful on those calls. Again, being conservative is trading spreads. Spreads, iron condors type scenarios here, because the choppiness, you can make the money off of it chopping around. Basically, time is going to be your friend versus being your enemy with options. Okay. All right. So you said you got cheap positions on JWN, just going to ride that this week. Okay, good. All right. And I think I actually like JWN. So again, right now is, don't overload the boat right now. Be very conservative. 1 or 2 trades. This thing got to figure its way out right now. So just 1 or 2 trades. Don't need to be trading crazy hard right now. This is not just from me. This is from all of the analysts, economists, everything. This is big level stuff that's impacting the markets. And we're basically at an unrest, lots of volatility. This will hurt you if you don't know what you're doing. Again, we invite anybody to join us. Our group is here on Facebook. And the community is on Facebook, so you guys can join. It's free. Just answer the questions. We let you in. You get to see how we actually do this every day, all day. And if you already, got some training, then, join us for the fun. We come in, we do our thing. We have lots of fun. We make this down to earth for you guys. I don't talk over your head. Nobody's talking over your head. We're regular, everyday people. You see, I don't even have the fresh cut right now. I'm in the hoodie, like you don't see, I'm not in the suit. I'm not on Wall Street with the briefcase. All right. So that means you can do this too. Make sure you guys check out our website at wallstreetjackboys.com. Our website is super dope. Okay. Really proud of this. It's mobile friendly, tablet friendly, whatever. You can get our courses. The courses, again, you can watch them on the go. Just basically learn our strategies, learn how you can make yourself some money. But yeah, website, it's like super dope. You guys just make sure you just check it out, scroll through, tell you what we do. You get the stock market basics, you get the platform configurations, you get the stock options education. We teach you our strategies, the technical assessments, you get the scans and everything, and the Facebook community. Basically, every testimony on the site is original. It's all real. It's nothing fake here. This is what we do for real. And make sure you guys check out the website. If you know somebody that can value from this, share the video, send them to our website. Make sure you guys join us on these social platforms. We're on Instagram, Twitter, LinkedIn, what's the other one? Pinterest. We're like everywhere. Okay. So anyway, I hope hope you guys have been able to find some value in what we're actually bringing here. But I definitely encourage you guys to join us every Sunday, Game Plan Sunday at 7 p.m. Eastern time. Try to do about 30-minute sessions or so. I went over a little today because we had a lot of new people that joined. So I just want to get through a lot of the bulk of the information. But with that being said, man, I guess we'll go ahead and bring this to a closing. Catch you guys next week. If you have any questions, send them over to info@wallstreetjackboys.com. You guys can hit me directly, hit one of our members, hit one of our top students. Somebody is going to help you to get to the information that you want to know or need to know. Anyway, with that being said, I'm out. Peace.